everybody. Welcome to your Friday edition, the weekend edition of the TraderMerlin Show. An exciting week out there to be sure, and next week's going to be probably even more exciting, but we'll just have to deal with what we have for today. So welcome, everybody. It is it's Friday, not Scotch today. I'm actually going with American Cutthroat Rye is what I'm drinking out there today. And cheers. I have to give a shout out to Sly Dog for his lyrics today. He says, "Mama, take this badge off of me. I can't use anymore." And Skilled Stocksman, showing his age, says that's GNR, Guns N' Roses. Nope, that's Bob Dylan. That's Bob Dylan. Originally, GNR did actually a pretty good damn rendition of it. Anyway, cheers. Happy Friday, everybody. So let's get started on the big topics. I believe Margaret yesterday was talking about Marvell Technologies, who reported earnings after market yesterday, and they were soaring. So for the second consecutive day, we've had just huge gains in the overall market based off of Nvidia and Marvell and the AI hysteria. Now, at some point, what will happen, at least from my assumption, will be that we'll get a few more days of this just crazy bull run, and then all of a sudden, it'll be a little bit of a reality check where you did have Marvell say, hey, we're going to get a lot more money from AI. And their press conference or earnings call just talked a lot about AI, just the same as Nvidia. So, of course, this will be the current trend. No surprise. You're going to hear a lot of companies adding new departments or directions of their company, and it's going to involve one of three terms. AI, automation, or intelligence will be the three buzzwords for the next probably 30 days, and that will be extreme, and then it'll start to fade off a little bit, and then it'll surge repeatedly over time. So let's go into my graphics for today. I just wanted to have something that showed just tons and tons of data to analyze. I didn't have any really great AI drawn pictures, but that's what I have for you guys for today. I want to start real quick just by looking at this earnings calendar. So this is from yesterday, which we should have looked at, but unfortunately I did not. Marvell Technology, there it is. They beat, and you can see they're up 32% today. They beat, but really the reason that they shot up is the same reason that Nvidia did. Forecast and raising their forecast. Most people were expecting Marvell to say, challenging times ahead. We're going to see things slow down just a little bit. They actually raised their earnings forecast for the next quarter, which caught a lot of people off guard. Then, of course, people like Goldman Sachs issuing a glowing review of Marvell saying, see, we told you, we've been bullish on Marvell for a long time, which is probably a bunch of BS, but they issued this rave review report about Marvell, and they soared today. So let's start with some of the chip makers or chip companies. I know they're not technically chip makers, but MRVL. There's your Marvell. And you can see this huge jump up, and really it was full throttle all day long. 32% gain. Nvidia still posting a nice gain of 2.54% on the day. So I was kind of expecting this to have a little bit of a pullback, but Marvell and some of the other companies may actually keep it up there. One of the things I noted, and I kind of went back through and did a little bit of number crunching, and some of you might have seen this on my Twitter feed. If you don't follow me on Twitter, do so. I will try to become more active. I know the two things I'm horrible at are marketing, which, as you guys can tell, having done this show just about every single day for the better part of 3 years, going on 4, only have 5,000 followers. You'd think I would be doing better because some 14-year-old kid's got 5 million and he knows nothing about markets. Anyway, if you look at the way that this thing has been going, I thought there'd be a little bit of a pullback. But on the Twitter feed, I said, if Nvidia gets to $404, which we're really close to, it hit an intraday high today. Let me give you the exact high. Intraday high today of $391. So all it really needs to do is move up $13 more. So not that big of a challenge. And that would give it a market cap of $1 trillion, making it the 7th company in the history of the United States to make it to $1 trillion. And that would be behind Microsoft, Google, Amazon, Tesla, Facebook, and there's one more hiding in there I can't think of. I already did Meta. Anyway, you guys know all the big usual suspects. Those are the ones that hit the $1 trillion mark. Anyway, there we go. Let's see. Larry says, I held it from 46 and 90 plus back to 30, still holding it in my IRA. Man, that's a tough one. From 46 to 90 and then all the way back to 30? That's got to hurt you a little bit. Hey, Johnny. What's up? Where are we in the debt ceiling talk? So, I'm going to be bouncing all over based off what you guys want to talk about today. Debt ceiling talks, apparently they're closer. Still no deal, but like I said, John O'Donnell and I both agree, and I think many of you agree as well, that they're going to come to some agreement, right? If anything, they shut it down for a couple days to create a little bit of stress, but it's not going to be a default. We can't go to default. I can't emphasize enough how damaging that would be to the U.S. economy and just as the world leader in so many areas. It would just make us look really bad. So not going to happen. We will, I don't think we're going to default on our debt. I think they may stall a little bit, but apparently they are, what was it, $70 billion off on what they need to achieve. So we're getting closer, but still it will be the topic that's moving the markets next week. You know, if you look at the reasons why Thursday and Friday have been so just amazing for you bulls out there, obviously AI, let's try to tone down that conversation because it's just so much, but AI, and then the second part being that people were believing that the debt ceiling talks were going better. I'm not certain that that's the case. I do think that they're going to come to some agreement next week, most likely the tail end as we get towards June 1st. Not that that's a hard deadline, as Janet Yellen had mentioned. It's kind of this floating deadline, but the way that we're burning through cash, I mean, seriously, the U.S. goes through cash faster than an NFL player in a strip club. Or actually, no, I guess we could say a basketball player, a la John Morant, but I'm too soon for my NFL jokes or NBA jokes. Anyway, I'll stop there while I'm ahead. Try this Highland Single Malt, 16-year. Freddie, it's smooth. I for some reason, I can't, well, cheers, John, to you on your Highland. I have a hard time with Scotch. It's the peatiness of it sometimes doesn't get me. I prefer a bourbon or a good rye. So today is a rye kind of day. I'm feeling kind of rye. All right, so that is your shot of whiskey to start the day. There were a few other comments that were brought in regarding different companies that you guys thought maybe we should look at. SK Hynix, which I actually have never heard of this, but Echo says SK Hynix is worth mentioning as they are also a power player in the chip-making semiconductor world. What I plan on doing this weekend, since the weather looks kind of terrible, I've got to work on the dog cart, as you guys know. I'll get the dog cart going. Made some good progress last night. I broke 4 drill bits last night, and one of them actually shattered and stuck in my hand last night. So luckily I had goggles on, so no pain there. But I was planning on looking at some of the major players and digging a little bit deeper into it since it's not my industry or sector of expertise, and just looking a little bit deeper into some of these semiconductor plays. At this point now, personally, I think if you're jumping in trying to buy some of these semiconductor companies, I think you're chasing. I think we're way too late. I mean, look at something like SMH, which is the semiconductor ETF. I think you'd all agree that the emotion, the greed right now is just pouring into the tech stocks. And just look at the volume on this ETF. It's not the highest it's ever been, but certainly surging way past the most recent highs, big gap ups, which tells me that the sellers are not selling those ETFs and everyone's trying to buy it. So we're seeing this big spike up to the upside. So to me, I think we're a bit overbought with regards to semiconductors. So don't chase it. Don't get overly optimistic. But let's maybe in future shows look at what might be an interesting play, find some demand zones, and look to maybe be buying as it pulls back into the demand zone after this hysteria subsides. It's just been pretty crazy out there. Let's see. Tom says, I do believe the Constitution requires debt payments first. $4 trillion are taken in taxes. Something less than $1 trillion is needed to cover interest. Yeah, not so sure on all that. I think you're talking annually. And remember, we did the numbers. A couple weeks ago where I think it was $313 trillion came in for the month of March, and 681 billion, went out. So almost over a 2-to-1 ratio there. But I don't know the end of year tax stuff. What I was reading with regards to this was that the amount of tax revenue that's come in this year is significantly lower than normal. Now, who knows if that's due to unemployment or layoffs or people just evading their taxes, but that will certainly be a piece of the puzzle here, is that tax revenue coming in to see if we can boost that $313 billion for the month of March. Maybe we get that higher in April and May as people are paying their taxes. It's an acquired taste. Unfortunately, we start at the bottom shelf. Go to the top shelf. I always say go straight to the top. A drill bit shattered. Is there a bank vault on your dog cart? No, I'm using tempered steel for the axle on the cart, and I'm trying to drill 2 little holes for cotter pins so the wheels I'm using don't randomly slide off. All right. Random topics of the day. Let's go to this one from Michael. Michael Gong, thank you for this one. He posted this down on the YouTube videos. He says, in continuing with today's theme, or let's just say yesterday's theme of AI participants, is PLTR, Palantir, also an AI play to benefit from this title shift? Absolutely. Again, read the article I wrote for Bar Chart back in March. It talks about, it says artificial intelligence, embrace the future. And one of the ones I pointed out as being a great play is PLTR. Just secondly, it seems like they have just started to turn a profit, albeit a very small one. Will this mean that they will soon be included in the S&P index? Who knows how long it will take for them to actually get to the S&P index, right? It doesn't necessarily mean that just because they're doing good and turn a profit, they get loaded in the S&P. What may happen is because the S&P obviously wants to be going up over time and AI is the big thing right now, they may bring in a couple new components, but they don't change them like weekly, right? It's a slow process to change them and get them out of the S&P. So I don't know if Palantir is going to be added to it, but let's go look at the price chart because they certainly have had a great run here recently. And you mentioned their earnings. You can look here on their earnings statement. They were expected to come out with 4 cents of earnings per share. They came out with 5, so that beat earnings expectations. And they really have been performing poorly up until the last 2 quarters. I know it's hard for you guys to see here, but if I go all the way back, let's go 1, 2, 3, 4, 5, 6 earnings announcements. So the last year and a half, 4 of those have been misses, but the last 2 have been earnings beat. So that's been great for Palantir. Remember, this was predominantly government contract stuff, automating the processes, inventory control, but using AI and automation for that. Now they're moving out into the public sector, which opens them up to a lot more potential. So I definitely think Palantir has great potential. But look at the price chart. It's gone from $7 to $14 in 3 weeks. You have 100% gain. So again, a lot of these are just getting wrapped up in hype. I'm kind of kicking myself because I wrote my article back in March, and I wish I would have bought some of these based off of my article, but I did not, unfortunately. So 3 words that don't exist in this world. What are they? Should have, could have, and would have. Leave it alone. Let's see. Man, I watch in a minute. YouTube does a good job of not listing your show for. Agent Sancho. What you got to do. It's actually pretty simple. So I will show you this real quick. If you have shows that you like, I'm assuming that you like this show. But if you like this show, let me real quick. It's probably going to do a little bit of a feedback. 3 words that don't exist. Okay, so if you go to YouTube, I'm already subscribed, Dabnabbit. Let me go to somebody else's channel that's not, that I haven't subscribed to. So I like DJs and music, so I'll go to DJ Mag, right? I have not subscribed to DJ Mag. But if you go to their videos, you can, hold on one second. Clicking on one of them, hopefully this will bring up the video for you. There's a little bell that if you click the bell, that generally will get you to subscribe. So you've got the subscribe piece right here. There usually is a bell. Where's the bell? There's a bell that you can click on, and that will alert you to all anytime I post something. Okay, so there you go. You subscribe anyway. All right, where are we talking about? We're going to Palantir. So if that big surge up, expect there to be a big crash down at some point. Don't chase this one. Those are annual numbers. The point being that there is plenty of money to cover bond interest, so no default. They might actually have to cut spending. Yeah, well, it's a question of if the money coming in, if you take all the money that's coming in and you go, okay, we have to pay. Who gets paid first? Typically in the world, it's going to be bondholders. If you look at when bankruptcy cases, bondholders get paid first. Shareholders are the last ones that get paid in financial markets. So yeah, bondholders will probably get paid first, but since we've never seen a situation like this, I don't know what's going to get cut. And I agree with you, Tom, that we actually have to cut spending without question. There are certain things that should be cut, but what gets cut? Now, who makes those decisions, and how quickly do those decisions get made? Because if this default does potentially go on, which I don't think it will, at some point it may actually come down to the bonds. And if those bonds don't get paid, then we really take a hit as a country. Sly Dog says, why don't you just score a card off Alibaba? Well, a couple reasons. Number one is first off, I don't want to go buy the cart. They're like, for the size of my dog, it's going to be like a $600, $700, $800 cart. Number two is I like making things. I'm a builder. I'm a constructor. I like just tinkering with stuff. So have a variety of different ideas, trying out different things, and just gonna work with this until I finally get it. We'll show you the finished results. Should be pretty cool. It's not a default to worry about. It's the lower rating of the U.S. credit that will hurt us. Right. But if we default, Big Eb, what's the immediate action by rating agencies? we lose our credit rating, right? We'll go from AAA to AA. Heavens forbid we go lower than that. But that's by defaulting, that will instantly downgrade our debt. So those two in my opinion, those two kind of go hand in hand. Quarterly pots of June. Okay, let's see what thoughts on Note for I don't Play-Doh. Government and Google contracts, AI plugin for providing legal info answers. Looks real interesting. So I don't know about the company, but I will bring it up here just to check out NOTE. Fiscal Note. So I'm just going to look back and see if this was a SPAC, which it feels like it was. Right, this feels like a SPAC just because almost all SPACs started at $10. They oscillate back and forth. So this looks like a SPAC. Now, that doesn't necessarily mean that you have to shy away from it and run away. However, in looking at this one, the price chart obviously looks really bad. Now, I'm a trend person, so the trend is your friend or the bend at the end. Therefore, this trend has been down. For me, you got to stay away from this thing. That said, and again, for I don't Play-Doh, who sent this one in, I can't say I would buy or sell this one right now. If I'm looking at trading it, what I'm looking at is that blue horizontal line at about $2.83. And the only reason that one's of interest is because it has not been able to make a new high for months. So if I can get it above $2.83, okay, maybe I'd be considering buying this. Now, if I'm a long-term investor, as I'm assuming you are or looking to with this Fiscal Note Holdings, if I'm a long-term investor, I would definitely help myself out by looking at some of the fundamentals. So I would go through the fundamentals. I would check and see how they're doing performance-wise and book values and earnings per share and income statements and things like that. But just technically, it doesn't look good right now. You know, and I can take it at face value that, oh, they are government for Google contracts, et cetera, but I don't know that. So I always like to do my own research and look into it. But from a technical perspective, the good news is it feels like it stopped falling. Of course, how much lower can it go? The answer is 0. But if it does stabilize here and capitalize on some of this AI future, which you say that they are involved with, then there might be some upside there. So technically, I wouldn't touch it until it gets above 283. At that point, I would certainly want to do some fundamental research just to make sure that the company is worth it and worthwhile. You know, I've seen way too many companies that people talk about or promote or say, hey, you should buy this one, and come to find out that they're absolute scams. So do your own research and make sure you know exactly what you're buying, not what Jim Cramer thinks you should buy. The bell is on the subscribe drop down next to your name. Oh, thanks, Alan. The subscribe drop down next to my name. See that one? Trying to think of because if I said, if I hit subscribe, there you go. So once I hit subscribe, there's the personalizer all, so I can get personalizer all of them from him. So I just subscribed to DJ Mag. Thank you for that one, Alan. Appreciate it. As a Bard partner, I appreciate the insight. Definitely, yeah. You know, trading's risky overall. We all know that, and you know, one of the things I like about building a crypto portfolio. So I don't particularly have an equity market portfolio. I'm more active than the average person, so I don't really hold a portfolio. I'll hold some positions longer than others, but I'm not looking for a portfolio construction in my trading stuff. With crypto, I do. And part of the logic for me with crypto is I'm finding specific market segments that I think are important. I broke those down into 3 key group areas. And then the 4th segment in that portfolio is the gamble portion. Personally, if I looked at this note stock, I would immediately put this in the gamble category. Anything under $5 to me falls in the gamble category. And you know, if the exchanges are going to delist a company for being below $5, then I might want to think about delisting it from my portfolio. That's just the general mindset that I have. So while there may be amazing opportunity and future potential here, there's a reason it's trading at $2.33 right now. So yeah, it's definitely risky. I'm not saying don't trade it, just be careful with it, know the risk, and I would put this in the gamble portion of my portfolio. And if things start to get better and it looks more solid, great, build a bigger position. But you notice their earnings statements here, they've had 4 of them, they have not beat earnings yet. They're losing money quarter after quarter after quarter after quarter. Now granted, it looks like it's getting better. They lost $3.06 back in August of 2022. In November of 2022, they lost $1.63. In March of this year, they lost 32 cents, and the most recent earnings announcement, they lost 14. So it is getting better. It may actually start to turn around here, but right now, for me personally, just too risky at it. Thoughts on space? Ooh, SPCE. another SPAC. All right, so SPCE, Virgin Galactic Holdings. You know, you look at how crushed this one is. I believe the recent talk was this picks up space travel will be cheaper in years to come. I believe the recent talk was that they're discontinuing this, that they're going to cut this whole thing out. Virgin Galactic completes its space mission, didn't lift off Barron's. I read something where they're talking about Virgin Galactic is thinking about shutting down, which would be weird now that you're a publicly traded company. Again, gamble portion of the portfolio, Ricardo. This is definitely being the gamble portion. If you look at this, I hate to say it, this looks actually even worse than the one that we just looked at. This looks worse than Note. Now, in my mind, just because the way that my brain works, and maybe some of yours work this way as well, when I hear Virgin Galactic Holdings, I immediately feel better because I know Virgin Galactic, right? We know Virgin. There's a bunch of successful companies out there. Richard Branson, crazy guy. Okay, I feel good about it. Well, this Note company, which I know nothing about, nor do I claim to, I would feel comfortable just by the ticker symbol or the name of the company by buying Virgin Galactic. Now, if I look at the charts, I would not want to buy Virgin Galactic. It has not been making higher highs. It's been making the same lows. It's drifting lower. And when I look at Note, at least Note looks like it's bottomed out and starting to curl back up. So funny how it's based off the price charts, but SPCE does not look like a buy to me right now. If you are looking at it, gamble portfolio only. Stay away from that bad boy, at least for the time being, until it stabilizes and starts to make some new highs. Joachim, grazie a te. Thank you very much. Anche a te. Yeah. I appreciate that. I think it's Virgin Orbit that's shutting down. Okay, maybe I'm wrong, Liz. I remember reading the headline and I was like kind of shocked because we're not a business, so I didn't. Anyway, let's keep moving on here. So we did Palantir for Michael. Let's look at this question from Mamon. This was also on the YouTube channel. So thank you, Mamon, for the YouTube channel. It says the NQ kind of looked like it may turn around at 15,000. Drop-based drop and fibs looking for it on the monthlies. Okay, so you're going way out with the big time frames. I'm just keeping this one there for a second. This is the daily time frame right here. You guys can see the chart. Haha, before you guys told me to switch over to another chart. You know, you look at the most recent high we've had, at least the one that we're headed towards right now, and that is clearly these peaks from back in March of last year. The only thing I would say there with those highs is that where I have the box drawn from is already a retest. If I continue this box over, you'll notice that it looks like we already came back into an existing supply from back in February, yet a lot of people are drawing their supply zones off the March. So even though I have that level there between 14,852 and 15,260, right? Your 15,000 level would fall right in the middle of that one, which I think is a logical target, right? I think there could be a good potential for it to stall there, but it's not the strongest supply zone, right? And I think you're looking, you said on the monthly, so let me bring up the monthly here. So what he's looking at is this bigger drop, base, and then drop again, right? That's the drop, base, drop, and then you talk about the fibs. So if you're using fibs, I'm not exactly sure where you're pulling them from, but we'll go from the peak to the bottom over here and extend those out just a little bit. Right now you're at a 618 retracement at current levels, like exactly right now. That supply zone that you had at 15,000 doesn't really coincide with the Fibonacci levels at all. It's just kind of in between those two zones, between your 78 and your 618. But I do like looking at the monthly. This drop-based drop that you talk about, though, for me personally, way too big, right? Way too big for me to even think about using that zone. The level that you're looking at is this, right? If you're saying that's my drop-based drop, well, that's too big. If you're conservative, you tighten up to there, that's still too big. Or even there, these are gigantic zones. So that's a hard one for me to shoot for. That's why I like breaking it down into smaller time frames. Here's the weekly. Now on the weekly time frame, okay, I can get a much tighter zone based off this long shooting star that happened for the week of March 28th of last year. And then further from there, we can refine down into the dailies. But yeah, I do think that overhead supply Mamon is coming up right around that 15,000 level. Certainly would be the logical spot for it to turn at. But right now, man, things are just looking incredibly strong for the NASDAQ, kind of shockingly strong. Let's see, what else do we got? I'll get to this one near the end of the show. So, All right, let me see what questions came in. Selling out of the money options on QQQ has less premium margin percent compared to selling NQ options. Why the premium to margin ratio is higher on NQ? I don't know that one, Ganesh. That I don't have an answer to. Are there higher risk associations with NQ than triple Q? Is it better to sell NQ options instead of QQQ? So I guess the main reason, well, if you go to, it's a tricky one. I was going to go say that there is no, you get the tax treatment, special tax treatment, 60/40 for 1256 contracts, but that doesn't apply to the NQ. So not really sure on that, why there's a premium out there, Ganesh. Now, you got me stumped today. I'll admit it. Cheers to stumping me on a question, Ganesh. I'm sure somebody in here may actually have a better answer, or at least have an answer that I don't have, for why the premium might be higher for NQ versus the triple Qs. Part of me believes it's because the price of the underlier is much bigger for the NQ, but I could be totally wrong on that one. Given inflation, rate pause, and debt ceiling, which do you prefer? Miners, gold, silver, platinum? I mean, silver, but it seems to be trading in an industrial commodity. Miners seem way undervalued. Yeah, I'm heavy in silver right now. Let's just tell you that. I'm very heavy on silver right now, a lot of it. SLV, and that was kind of my main thinking for why, or main play was the inflation side of things. Now, I'm going to correct you on one part there, Play. I'll just call you Plato. Plato says, given inflation, rate pause. That changed today. Did anybody see that? Did you actually? It spiked yesterday, and now all of a sudden they're pricing in a 25 basis point increase at the June 14th meeting. Let me bring that up for you so you guys can see what the futures traders are doing. Complete change. Complete change. And I still am in the camp of a pause, but the Fed funds futures right now have surged, and now there is a 71% chance of them raising at the June 14th meeting. So no pause. And you can see here, you go back a month, there was only a 13% chance of a 25 basis point increase. Now it's 71. Yesterday was 50. So pretty interesting seeing the big surge here. And again, I think that, when you step back and try to figure out why would that be? Why would the markets be rallying so much? And then all of a sudden, why would they be anticipating a 25 basis point increase? A lot of different reasons as to why that may be. But I believe that because the markets are starting to rip up and all of a sudden it feels like, hey, we're back to a roaring bull market, at least we saw just for a few days. I think that traders are kind of, and by the way, the resolving of the debt ceiling, which will probably mean more spending, which could lead to more inflation, that inflation is not going to subside as quickly as possible. Therefore, the Fed now has the green light to raise a little bit just to be more cautious. I think that's what traders are expecting. I think they're going to pause, but I've been fooled before. But yeah, this is a huge change, a monstrous change in the last 48 hours, going from a week ago we were at 17%, now it's 71%. So this will probably drop back down here a little bit. Isn't that due to PCE announced this morning? Well, I think that's a piece of it. We can go here. Let's go to Forex Factory real quick, and I'll bring that one up for you. So the PCE that came out just showed just slightly higher than expected, and that could certainly be a big factor to it. But there's a lot of different pieces. I think that higher inflation for PCE is certainly a piece of it, but I think it has a lot to do with this market just going haywire and the debt ceiling, right? The resolving of the debt ceiling, kind of alluding to the fact that, okay, we're going to come to some agreement that will most likely raise the debt ceiling. I can't imagine that they will all of a sudden just drop it back down by making a slew of cuts. That's probably not going to happen right away. As I mentioned, to fix the problem that we are in is not a one-day decision. It's a multi-year decision and actions by our leaders, elected officials, to take actions to cut those costs and get government in a better position. That's not going to happen in this vote. But we'll probably raise the debt ceiling, not a lot, but we'll raise it, which means more spending into the economy going forward. And again, that could lead to more inflation. That's kind of the big pieces there. Yeah, I thought the increase in Fed funds futures would rank silver. I was hoping so too. Didn't work. I mean, we did see silver move up a little bit today. So you had a 2.5% gain in SLV today. So let me bring that one up. Here's SLV. 2.49%. It's up another 0.25% in the after-hour session. Or at least from the rollover, because we're done now. But your weekly on silver, you've had a month in a row of just cratering on the price of silver, which is unfortunate, but it's okay. So silver down almost 11% in the last 4 weeks. The way we finished today, at least the end of today, was nice. Having a nice little pop up to close, and I do think you'll see this start to move up here a little bit more. Hey, Shinobi, good to see you, Ryan. Good evening over there, my friend. U.S. government needs to start trading meme coins. Will help out the debts. Don't get us into more trouble. Meme coins. You know how to push my buttons, Brian. I can't stand these freaking meme coin idiots. It's funny. There's a guy out there. I think we talked about him the other day. What's it called? Bitcoin Boy or Yeah, I think it's Bitcoin Boy. And he's just this big advocate for crypto, and he does put out a lot of good information and good videos on crypto. But now all of a sudden he's shilling his his meme coin, which serves no purpose. There's no utility at all. It's a garbage scam, pump and dump coin, and now he's promoting it as being listed on exchanges. I'm like, you realize that you're the reason that regulators want to shut crypto down because of jerks like this guy. So stay away from meme coins. Don't buy them. They're garbage. How far are you dating your SLV going off when you think the Fed will pause? No, so what I'll do is I generally will start by, BitBoy Crypto. Thank you. That's the guy. Yeah, what a punk. Generally with the SLV, what I've been doing for the past 4 years is I'll sell puts at levels I want to buy it. If it falls down and gets me, great. I'll sell calls against that. So right now I'm long from 22 on my SLV, which is right now I'm over 10,000 shares of SLV. And you can see I'm underwater on it right now, so that's fine. I'm selling calls either depends on the premium I can get, weekly, 2 weeks out, 3 weeks out, but nothing more than 30 days out is how far I'll sell those. That's pretty much it. What's up, Frank? Good to see you. Ben Armstrong, yep. What's really interesting about the crypto space, and I know some of you are not in it, but Brian and I are immersed in it, is you have some people that started off with really good intentions and really there to help and educate and inform, and they turn into total scumbags. BitBoy Crypto being one of those, and the other guy being Ivan on Tech. This guy was genius, very smart. He's really taught me a lot about how crypto works, and now all he does is pump Pulse Chain and Hex Token, which is a scam coin anyway. So nuts. Okay, long-term you bullish on oil was 15. Long-term you are bullish on oil was $59 in 2019. Now a few people going to the office in 2009. Yeah, you would think that. So again, what will happen is OPEC will continue to cut production in order to keep price high. So even if we get fewer people going to work, I know people who are not going to work at all. Entire companies are now selling their office space or backing out of leases because why have it, right? Why spend that $10,000, $15,000, $20,000 a month? So do I think crypto banter is scammy? Kind of. I think that they try to educate, but I think that they're clickbait pumpers. There's some good stuff that they do, but I think as a whole, I don't know. It's become more of a game show, it feels like, at crypto banter. So yeah, I'm still bullish on oil, but again, I think it has to do with manipulation. So when I look at the powers that be for oil, we think, electric cars. We're all going to be driving electric cars. And no, we're not. You have countries banning fossil fuel burning vehicles in like 2035 or something like that. Okay, fine. It's I don't know. I still don't think we're going to ban fossil fuels altogether. And even if we do, I think you'll have countries that continue to cut production so the price stays higher. Looking at the U.S., we are doing more and more EVs. Obviously, I don't know if you guys saw the latest report, but Tesla, with the Tesla Model Y, is the number one selling. Was it number one selling luxury car? I think there was a headline today. It was like it beat out BMW. It's like the best selling. I was like, wow. Pretty amazing, considering that everyone said they were going to fail years ago. But, we're not all going to drive electric vehicles. I personally would rather have a gas guzzler. I know it sounds weird, but I think that EVs are doing damage in other ways. I think that the EV is kind of like the COVID vaccine. It sounds great. It's going to heal all these problems. You're all going to do better. But the damage that might be caused from the vaccine, which has been completely untested over time, we have not been using our mRNA for a long period of time, so we don't know the effects of spike proteins on the human body. That could create problems down the road, and time will tell. Kind of like when they started selling cigarettes, back in the 1950s, you could smoke in a school, smoke on airplanes, no big deal. Puff it away, no problems. And then, oh crap, this causes cancer. How long did that take to figure out? 20, 30, 40 years? So, I look at the EV side of things, and while it sounds great and the performance is unmatched, I mean, jumping in a Tesla Plaid and dropping the hammer, holy cow, you get whiplash from that thing. My issue is the mining of all these rare earth minerals. How much damage is that going to do, not only to the environment, but to infrastructure and different economies, right? Anyway, I'm soapboxing here. I personally probably won't get an EV. I have electric bikes. That's a little bit different, but at some point maybe. But I don't think that that's going to be the piece that kills crude oil. I think crude oil will be around. We are addicted to petroleum products in every country around the world. Are you going to buy an electric water bottle? They're made out of petroleum, so you'll still have petroleum products to use around. True by EV versus gas sippers. Yeah, that mRNA piece is kind of scary, man. But anyway, won't make this a political show. Sheldon teaches some good stuff. Yeah, I think that I think they do. I've watched a couple of their headlines, and they're absolute clickbait. And I see other people go after them when they were outright wrong and they don't answer up to it. But whatever. You've got the good and the bad out there with everybody. I'm sure there's things that I do that people don't like, which is fine. How about the Cybertruck, Merlin? I'm looking forward to getting mine next year. I'll come visit you in the UK and you can take me for a spin in your Cybertruck. I'm curious to see what it looks like. I'm fine, but you guys should know me well enough right now. I'm not the type of person to go out and spend $100,000 on a car. It just makes no sense. I mean, for me to shell out the money I did for my truck was a stretch, and I'm one also I don't want to take on more car loans or anything. So if I'm going to buy something, I'm going to buy it outright. I don't want to be making payments and paying a bunch of interest. So I buy what I like, what's comfortable, what's cheap to repair, what's economical, and fits my needs, which for me is a truck. And so I have not a gas-friendly truck. For those of you who have Toyota, they're really not that great. What price range you get an e-bike? I bought 13 of them for roughly $1,000. First batch was 800, second batch was 1,000, but I bought them from China. And if anybody here wants the connection, I can give you their number. But you got to get the deal, you got to buy a bunch. But they're awesome. I love these bikes. They're fantastic. I have a Van Moof. All right. Mine is a Vitruvia. I don't know what it's a clunky Chinese brand, which I thought was gonna be garbage, and they turned out to be really good bikes, by the way. Relative comments, appreciated value. Even my car's going. Good on, Frank. Not now. That was because of that chip shortage. So yeah, there was that. Not wasting money on cars for status. Newport Beach requires you to move. I know, Tom. I have worked with people who drive Ferraris and Lamborghinis and Bentleys and Porsches and the high-end BMWs. I'm like, that's nice, cool, good for you. I'm one that would rather take that money and invest it and grow that as opposed to buy myself a $20,000 watch or wear fancy jewelry. And I don't care about any of that stuff. People just steal jewelry. Looks pretentious to me. Can a cargo ship from China run on a battery? Can a cruise ship line run on a battery? Not yet. By the way, they were talking about having electric airplanes, which is interesting considering how heavy the batteries are. I don't know how long that would last, but at some point in the future, when we get battery efficiency at a much better scale, and I believe Elon Musk is doing tremendous strides in getting battery efficiency and learning more about the technology to make them better, we may have electric airplanes. That would be pretty. Imagine how quiet an electric airplane would be. Actually, no, it wouldn't be that quiet, would it? Would you have it? It would be quieter. You'd still hear the fan blades, but anyway, they're getting me off topic. See, this is what happens when I start drinking on the show. I'm almost done. Cargo ships can run on hydrogen. Cargo ships can run on nuclear power too. All right, let's get nuclear powered cargo ships. Why not? We got nuclear powered submarines. They'll last forever. Never have to fuel them up again. Plato says oil is also very interesting with the lowering rig count, lowering storage levels, and possible OPEC cut next month. Producers got hit today with the despite. Yeah, and that's kind of what I've been expecting, is to have the producers cut again. And when you have the Saudi energy minister just a couple of days ago saying that short sellers are going to feel some pain, and I think a lot of people are shorting the markets right now for oil because of all the factors we just discussed. More electric vehicles, fewer people are driving, all these factors that say oil is going to go down. All they have to do is cut production, and that thing will jump 10% overnight. So maybe long term, talking 20, 30 years, yeah, crude oil might be going down. But over the next 5, 10 years, I think it'll be going up. That's true. They could charge batteries. I heard Ford is teaming Tesla for Tesla make more charging stations for Ford. That would be good. It would be great for them. I saw nuclear-powered passenger cargo ships in the 50s. It didn't last long. And there's a lot of people. Elon Musk is actually out there pounding the table saying we need more nuclear power, right? Use more nuclear power. He had a discussion with Macron of France, and that was about, a lot of it was about nuclear power. So, careful. Elon Musk starts running for president, you may see some nuclear power come back. For those of you who might be remembering 3 Mile Island, of course that was a long time ago. But all right, let me really quickly run through, and if you guys wouldn't mind, type in the chat what you think. But I'm going to just real quickly show you this. I've had a couple people say, hey, can you do shows on different topics? So let's just wrap up this show today by running through what some of those might be. So these are some suggestions that I had, or requests for topics. Personal finances was one of them. Another one was credit cards, tips and tricks, which I asked you guys about the other day. Number 3 was PC requirements for traders, kind of what should we be thinking about when building our computers if you're a trader. Number 4 was how to estimate intrinsic value of a stock. Number 5 was FinViz recommended filters for selecting great companies to invest in for the long run. Now, those are just 5. If you have some that you would like addressed, or something you think would be interesting for you, or maybe even people that that don't watch this show and you like trying to educate them on something and you think I might be able to help, let me know what those topics are. You can type them into chat. I'd be happy to do I can do shows on just about anything as long as it doesn't cannibalize the education content taught at Online Trading Academy. I can't do that, but I can certainly go into a lot of different topics here at high level. Ricardo likes all those topics. Good. Shinobi says ATR. Okay, I'd love to do that. ATR would be useful to understand how you use it for entries, exits, and targets. Okay, we can do that one. ATR is one of my personal favorites. I love ATR. I think ATR is one that most people don't look at. And man, and it helps you determine so much about the character of whatever instrument you're trading, which I believe is critical, because obviously we're trading something that feels like it's living and breathing. When you trade Apple, it's a living, breathing entity, because behind it are buyers and sellers, and they're pushing those markets in a specific direction. So yeah, I want to know the ATR and what does it normally do? What are the typical expectations for something to do? And if you got any others, type them in the chat there. I will wrap up here, but I'll give you guys some time to type in a couple into chat. It'd be interesting to always compare intrinsic value to ticker value. Okay. As far as Monday goes, well, obviously, we are not going to be doing a show on Monday. I'm going to quickly go to, obviously we have Memorial Day on Monday, so I will not be doing a show. So we'll be going back to Tuesday will be the next show that we do. So let me go up here and bring up the calendar. I'll show you the calendar for Tuesday. Let's go. There's Tuesday the 30th. And by the way, it's the last week of the month of May. So far, this is definitely not a sell in May and go away kind of market. I hope that many of you watched that show that we did where I talked about sell in May and go away, and say it doesn't always work. So it does not mean you need to be selling in May and going away. Nobody says bank holiday Monday in the UK. Same here. Same here in the US. We're shut down Monday, so there's really nothing cooking. For Tuesday, though, you do have the Case-Shiller Composite 20 Home Price Index. This is one that has done a complete about face. Look how quickly this is sold off. Now we are negative, and the expectation is we're going to drop even further in the negative territory. So this will be a really interesting one for Tuesday. The question for me is, how deep does this go? If you look at the history of prices for houses, there have been a couple of dips in the Case-Shiller Composite 20 Home Price Index. We had it below zero, meaning contractions in price from March of 2007 until 2010. So 3 years it was contracting. And then all of a sudden it dipped back down in December of 2010 to 2012. So a year and a half. So we had those big dips. And other than that, since 2012, it's been just price appreciating, going up, going up, going up, going up, going up. And all of a sudden, we've had this monstrous decline in the value of homes. Case-Shiller Composite 20 Home Price Index saying, not looking good. Expectations are right now we're going to come out at negative 1.7%. So that's a pretty scary one for next week, which I'm sure many of you will be watching. What else do we have for the U.S. with just consumer confidence numbers? You had CPI coming out for Australia as well as the European Union. As well as for Germany. And then you also have France coming out with their CPI numbers as well. Isn't that good for buyers, though? Yeah, at some point, right? If you're holding real estate, thinking it's going to go up in value, if you're a flipper, right? What this is going to do is flippers are getting destroyed. So people who bought a home for, let's say, around me, $900,000, expecting to flip it for 1.2 in 3 months, as a lot of people have been doing, that ain't happening. Right? All of a sudden now they're putting money in and can be struggling to get their money out of it. So yes, it's great for buyers. I think what it means for me personally, if you're looking at buying real estate, don't buy now. Just wait. If we have these yields keep rising and that 30-year gets more and more expensive, it's going to cause pain for the market. Here's the 10-year today. Actually, yeah, let's go off the 10. You can see that 10-year over the past 2 weeks had a real big surge. And 30-year fixed rate mortgages are back above 7%. So if this continues to rally and we get back above our high that we had back in October of last year, we may be seeing 8% 30-year fixed rate mortgages at that point. And again, that's going to price a lot more people out of the marketplace going forward. So yes, it's great for people who are looking to buy homes. But again, if you see this yield surge up, what that means is that the price of getting a mortgage has surged dramatically. That prices people out of the market. Therefore, sellers have to drop their prices for homes. So while the prices of homes drop, you're still going to be locking yourself in at a higher rate mortgage. What I would say is you wait for housing prices to drop, and then you wait for the mortgage prices to drop. And once those two kind of bottom out, then you can look at jumping in the housing market. Anyway, does the case-shiller in the U.S. lead housing indicators in other countries? Not to my knowledge, Shinobi. Not to my knowledge. I mean, when you look at the power of the U.S. economy, typically it does lead the global markets, right? So when you have the U.S. starts to show, a weak equity market, generally the rest of the world catches a cold. I think that's the mantra, right? When the U.S. sneezes, the U.S. economy sneezes, the rest of the world gets a cold, something like that. I think there's definitely a lead aspect to it, but how much, I don't know. I generally don't trade any international markets. Sometimes I'll only way I do international markets is by trading currencies. I don't trade individual securities from different countries. Okay, so that's gonna do it. I have that was your earnings announcement. Our earnings announcements, there's nothing for Tuesday or Monday, obviously. We had the economic calendar for Tuesday there. I have a couple topics that came in here. What are my thoughts on investing in corporate bonds? Well, if you're looking at risk, then I would say great. Because remember, if we start to go through a difficult financial time in the U.S. and we do go into the forecasted recession that so many economists are predicting, then what do you think is going to happen to corporations? It's going to become much tougher for them to make their financial obligations, and there might be some issues with corporate debt. So I personally am not a fan of it because I'd rather trade the equity markets and generate yield that way. Whether I'm using option strategies or dividends, I'm more of an option to generate income streams, but I don't personally need bonds in my portfolio at this point. I think that I can do better with the equity markets. All right, that's gonna do it. I'm gonna wrap up. Hope you guys have a fantastic weekend. I am out of my rye whiskey here, so I'm gonna have to go refill. I hope that you all enjoyed today. I hope you had a great trading week. Tomorrow will be a short week, Memorial Day, so raise a glass and all those fallen soldiers out there that fought for life, liberty, and the pursuit of happiness, which I think some people have been taking for granted. But cheers to all those that have served and those that have died while in their service. That said, I hope you all have a fantastic remainder of your day. Have a great weekend. Do something fun. I will see you guys all on Tuesday. Take care.